And so welcome to another week of Money Club Mondays. Thanks for being here. We just want to kick off each and every week with a little bit of training and an introduction to some of our new investors and members to the Private Money Club. So this Monday webinar series is all about private lending and Money School's Private Money Club. So the Private Money Club, as a lot of you probably know, is the place where borrowers can meet lenders and lenders can meet borrowers. So if you have money, you're looking to lend out and create passive income for yourself, this is a great place to find people and opportunities to be able to do that with. And if you have deals that you need money for, that you need funding for, if you're looking to scale your business, one of the biggest roadblocks in scaling a flipping business is lack of funds. And once you hit a certain point, when it comes to either rentals or flipping in real estate, the banks are going to stop lending to you in the traditional manner. So that's when you need to go out and you need to find another way. So that's a lot of times where private lending comes in, hard money, gap lending. And these are all different terms and ideas that we'll talk about each week as time goes on. If you're not familiar with them. So that's what the Private Money Club is all about. So we can match people with other people and create magic through those opportunities, and everybody can put themselves in a win-win position, a win-win situation. So as the numbers are climbing here, before we rock into this, I see them jumping up right now. So let me just talk a little bit about some housekeeping things that are going on right now. So first off, if you haven't been over to Chris's YouTube page, hop on this. I'll do a quick screen share, but I was just on looking around while I was waiting for 1 o'clock to come. And it's really neat what Chris and our team have done with this YouTube page. You know, we do team huddles twice a week for about an hour each time we do them twice a week. And all we do is talk about different ways to get the message out there and, talk about marketing and what we can do. And we've had a push for the last few months, several months now on YouTube, and really growing the YouTube following. So it's up to 2.39 thousand subscribers, which is pretty cool. So if you have not subscribed to the YouTube page, if you head over, it's just youtube.com/the Chris Naugle. I think I'm on the feature content, so don't worry about that. Or you can just search the Chris Naugle, it'll pop up. But if you go over here and hit this little subscribe button, it'll go ahead and alert you. And I think you can even hit this little bell. So anything that, anytime we post a new video, it'll ping you on your computer and let you know that there's some new content up. But I was looking through some of this, and it's just amazing, all the training and education that's on this YouTube page. And it's done in a really neat little organized fashion where you can look at different playlists. So all the wealth webinar series, different case studies that we do with our clients for the Money Multiplier. This is all the stuff that Sodi does with the 10/10 trading, options trading, and hedging strategies. The Money Club Monday replays will be up in here as well. And then all the live streams that Chris does, as well as all the additional training. So this was a really good one from last week. Bank-owned life insurance, otherwise known as BOLI. Why, when you go into a bank, is everybody in that bank a vice president? Well, by making all of those employees vice presidents, it gives the company a vested interest in that employee, and the bank, the company, now can buy a life insurance policy on that individual. So why do banks buy life insurance policies on their employees? The same reason we buy life insurance policies, to become the bank and be the bank. So all we do is mimic what banks do. And this is a great video explaining how that works and why banks do that, and all the advantages of how they do it and why we do it as well. So hop on. That's a really good video that was put up last week. And I mean, the content just goes on and on and on. So make sure you're on here and you're a subscriber to the YouTube channel. So just figured I'd share that real fast while we're letting the count jump in. So, hey, Joseph, hey, Gene, hey, Donna, how's everybody doing today? So if it's your first time here, thank you for being here. If you are hopping on all of our webinars, we do live trainings every Monday at 1 o'clock Eastern. The Monday, this one that you're on right now, Money Club Mondays. We have every Wednesday the Wealth Webinar series at 1 o'clock Eastern, where Chris brings on typically a special guest. And we actually just planned out a 4-week series that's going to start in, I believe, June, on that Wealth Webinar series of Chris, myself, and Devin Burr, Mr. Burr himself, who you guys will see more and more of, because Devin is just a rock star when it comes to marketing, especially on TikTok. So if you're on TikTok, find Devin Burr. But Chris, myself, and Devin are going to do a 4-week series on the Money Multiplier, business uses, private lending, and how it all comes together using your companies coming up in June. So make sure to keep an eye out for that. But the cool thing is if you register for these webinars, even if you can't make them live, we record them and we send out the recording to them so you can watch them later on whenever it's convenient. Of course, if you're on live, you can ask questions, interact, and have a good time. But otherwise, make sure you check out the content afterwards. And then we also do the other Ask Me Anything series on Wednesdays at 4:30 Eastern, where we kind of grab a beer or a cocktail or a coffee, and we just kind of answer all the questions. You can pre-submit questions or submit questions on live, and we do that every Wednesday as well. Those aren't always recorded though, so try and hop on those live, but the rest of them we send it out to you. So, all right, let's see. I enjoyed speaking with a member of the Money Club looking for lending. Yeah, absolutely. Awesome. Awesome. So what I'm going to do right now today is just talk a little bit about what we got going on with Money Multiplier and the Safari Fund. And then I should have a special guest joining me here shortly. His name is Steve Larson, and it looks like Steve's on right now. So in a few minutes, I'm going to promote Steve to panelist right now, and we're going to bring him up here shortly. Let me do that right now. All right, so Steve's going to be joining me as a panelist. And Steve is a new member for the Money Club, for the Private Money Club. Steve is a very experienced investor out of the Indianapolis market, and he's got some really cool stuff going on. So I'm going to bring Steve on shortly to go ahead and do a little Q&A and get some of his deals in front of you. Those of you that are lenders on the call right now, pay close attention, because Steve has anything from small $15,000, $20,000 investment opportunities up to like 150,000 plus, depending on what you're looking for. And these are all quick flips. So we'll bring Steve on here in just a second. Now, before I do that, we do have a couple things coming up. So, you know, one of the reasons why Money Club, the Private Money Club, was developed was because we do a lot with what's called the Money Multiplier, which are the infinite banking concept, which are those specially designed whole life insurance policies that you always hear us talking about, right? And the reason why these policies are so powerful is because they accomplish two things. So anytime you need to create wealth, you really need two things. And this is studying from people that I've studied for 15 years now when it comes to entrepreneurship and wealth building. And they all boil down to two things you really need. So number one, uninterrupted compounding interest. Well, really compounding interest. Compounding interest is the idea of, would you rather have a penny today that multiplies, that doubles itself every day for the next month, so for 30 days, or would you rather me give you $1 million cash today and just forget about it? So one penny that doubles every day over the next month, or $1 million today, what would you rather have? Well, if you chose $1 million today over a penny, then you're going to be surprised, because if you go do the math, $1 million or a penny doubled every day for the next month, for the next 30 days, is going to be something like over $5 million at the end of that month. So your $1 million today doesn't look as strong when you could have over $5 million in 30 days from now. And that's the power of compounding interest. So what these Money Multiplier IBC specially designed whole life policies do for us is they allow us to put our money into this vehicle that then every dollar that's put in there is now going to compound uninterrupted, guaranteed every year for the rest of your life. Okay. So we take our money and first we put it into these policies. If you're looking to pay off debt, excellent. This is going to help you pay back the debt quicker than doing it on your own without the policy, because of something that's called recycle and recapture of interest that prior you were giving to somebody else. You're now keeping all of that interest and all of that money you were giving away to somebody else before. You're keeping it within your financial system now. And by doing that, recycling and recapturing it and keeping it in your financial system to start snowballing, you're able to pay off your debt a lot faster. And our team does this for you. Once you have a policy, you now work with what's called your mapping agent, and your mapping agent creates what's called a debt map. So they're going to create a map, a plan on how to get that paid off so much quicker than otherwise possible. And if you haven't seen that video yet, make sure you watch our full 90-minute Money Multiplier training that gives a couple examples of how that happens. Now, what happens though is we have a lot of successful individuals that see the value in these Money Multiplier IBC policies, but they don't have a lot of debt, or at least a lot of high interest debt. Okay. There's nothing wrong with having some debt, especially when it comes to real estate. That's how we leverage our money. That's how we leverage real estate, with low interest loans. But we have a lot of people, if you don't have a lot of those high interest, 15, 20, 25% type credit card loans and things like that out there, then what do you do? So this is where the power of these policies come in. And this is one of the reasons why this private money club was created, because once you have that money in there in your banking system and you don't have any debts to pay off, well, this is where number two comes in for creating wealth. Remember, I told you there's two things that are needed. Number one, compounding interest. These create that uninterrupted, guaranteed compounding returns for you. But number two, you always have to have your money out there working for you just as hard as you work to get that money in the first place. Your money always has to be out there moving. So we need that money to always be moving. It always constantly has to be doing something. If it's just sitting in an IBC policy, if it's sitting in a savings account, if it's just sitting somewhere, it's not moving, it's not doing anything for you, and your wealth is not growing. When your money's out there moving, it's growing and you're creating wealth. So you have the money over here, uninterrupted compounding interest. Every dollar you put into that IBC policy at all times for the rest of your life. And now you take that money and you get it moving for you. And let's say you don't have the time to go out there and actively invest in real estate, or you don't have enough money to go out there and do these flips using all your own money. Well, that's where the private money club comes in, because you now have an opportunity to meet people that have deals that you can invest in. If you're doing deals, you now can meet people that have that money that they can lend to you, so you can go out there and you can buy these rentals, so you can buy these mobile home parks, so you can do these flips and create your wealth and keep your money moving and grow your wealth that way. So that's why we love these Money Multiplier IBC policies when it comes to the private money club, when it comes to generating and creating wealth. And it's why we put as much money as we can into these as our foundation, so the money's in there compounding. And then we take it and we do all this other stuff that we talk about, on our 3-day trainings when it comes to, buying crypto, buying stocks, options trading, buying real estate, flipping homes, buying rentals, buying mobile home parks, creating these funds, all the stuff that we talk about, flipping land. I'm just curious, is anybody on right now? Is anybody on the land flipping training that Jack Posh has going on? I got a recording. I'm going to watch it later because I had a bunch of things to do. It started at 12 o'clock noon. Is anybody on there right now? I got a couple emails of people asking me about it this morning. So I'm just wondering. So hopefully not. Hopefully you guys are on there watching that and you watch this replay later. But it's, land flipping is something that's becoming very good because you're not dealing with tenants, toilets, and termites, right? So it's kind of that whole idea, and it's kind of an under-serviced market as well. So everybody's out there, real estate's real hot right now. So you kind of got to, look at, changing with that. You always want to change with the climate that we're in. And this is kind of an undervalued asset right now that we can go out there and make some money on. So it's good stuff like that we always talk about. So love Money Multiplier IBC policies. To launch into all this other stuff, especially with the private money club. It gives you a great source to be able to fund a lot of these deals, like Steve Lawson, who's going to be joining me here in just a second. We'll be talking about that. Before I do that though, one more thing I want to mention. We do have an advanced IBC training coming up next weekend. So it's going to be May 22nd and the 23rd. I'll put the link in the comments. I believe it's $49 for both days. So it's very inexpensive. And we were just had a Money Multiplier team strategy session for this IBC training that we have coming up last Thursday. And man, I got to tell you, the stuff that we have planned for those 2 days is going to blow your minds. It's really, truly amazing stuff that we have planned. So make sure you get on there. This is going to be some advanced techniques. This is not for a beginner. If you just started a policy, your first policy, fine, hop on the training. But if you don't have a policy or don't understand IBC yet, make sure you watch Chris's YouTube page, watch the 90-minute training. You need to understand the basics of IBC before you go to this advanced training, because it's going to be unbelievable. So make sure you register for that if you haven't. I just wanted to mention that since it's coming up next weekend and you're not going to want to miss that. We do record that also and send out the training. So if you can't make it live, no worries. We will give you the recording right afterwards. And the last thing I want to mention before I bring Steve on is the Safari Fund is now live. So this is the fund you've heard Chris talking about, where Chris Rude is out here buying mobile home parks. And this new Safari Fund is funding these mobile home park purchases. And we're creating cash flow and creating, so it's going to pay the investor, you, the investor, through the Safari Fund, anywhere from 7 to 12% returns, depending on the term. Whether it's a year, 2 years, or 3 years. So 7 to 12%. I'm not going to talk about the details. If you do want to hear more about that though, and you're in the private money club, just let me know and I will connect you with the fund manager. His name is Harrison. So Hershin, I'm sorry. So let's connect you with him and he can give you all the details and get you started in that fund. But if you're in the private money club, just let me know and I can connect you with them. And if you need to join the private money club, just shoot me an email also, and I will send you all the information to get you in the private money club so we can get you in front of all these deals, get your money out there moving and working for you. So you're creating more money. And if you have deals, let's get those things funded immediately. So I will get my email there. So if anybody wants to join the private money club, just shoot me an email and I'll get you the details on that. All right. With all of that being said, I do want to bring on Steve now. So Steve, are you with me? Are you able to unmute yourself or put the video on? I might have to allow you to do video. Hang on. Let me just see. Gene. Awesome, Gene. You're going to love the class. It's a really good 2-day class. He said he just.
Okay. Can you hear me?
I can. Hey, Steve, how's it going?
All right. Doing just fine.
Good.
I can't quite figure out the camera, but at least we got the microphone figured out.
Let me, I might have to turn it on. Just give me 1 second. Zoom's always changing their rules and I always forget how it works, but hang on 1 second. Allow panelists to start video. Okay. You should be able to start your video if you want to, Steve.
Wait. Zoom Q&A. Start. Oh, there it is right there. Oh, I'm sorry. You're looking at me.
Hey, there we go.
Sorry about your luck.
Yes, sir. How are you?
Doing just fine.
All right. Well, thank you for coming on here. I really appreciate it.
It's not gonna. I guess we'll just do this. All right.
Yeah, looks good. Looks good. All right. So I'll let you introduce yourself, Steve, but just a real quick background. So Steve just joined the Private Money Club this last weekend. He has been around our network and has been around Chris in our trainings now for quite some time. And he does a lot of business with another one of our kind of affiliate partners, a guy named Steve Richards, who is an unbelievable trainer, also has the CEO Nation, which is awesome. Check it out on Facebook if you haven't already. But so Steve does a lot of business in the Indianapolis market and has been doing it now for a long term. And from the conversations I've had with Steve so far, what's really impressed me about him is he understands what I was mentioning earlier as far as being able to pivot and change with different markets and with different market conditions. So I'll let him get a little bit into it, but he's got everything from long-term holds to where those became different to multifamily to, affordable housing to now doing quick flips, because again, that's what the market, he was doing the big $1 million type flips, but so, hey, that might not be the best idea right now anymore. So let me get into the quick flips that I can get in and out of these things, get the money turned over and just do a whole bunch of those things. So he got to the point where he scaled so much, he's tapping into all of his private money that he already has access to. And he's just looking to share in the wealth and bring a few new private lenders into what he's doing, build those relationships. So I would say we probably will have enough room for a few lenders from the private money club to work with Steve. And I have a feeling you'll be with Steve long-term. But Steve, that's my quick introduction of you. You can get a little bit more in depth. So thanks for being here again. And I think you're muted right now. So you want to hit unmute.
Sorry about that.
There we go.
So, first of all, thank you for that introduction. I was going to take just a minute, you mentioned experience. I was going to talk a little bit about that and then kind of the current opportunity and why we're getting the current opportunity we have. So from an experience standpoint, just real quick, I spent 10 years as a certified financial planner and then switched over, realized real estate was much better than stocks, bonds, and mutual funds. Switched over in 2002. And I've been working with investors and investing in real estate since 2002. During that time, like I said, I've done a lot of regular fix and flips, high-end fix and flips, multifamily, wholesaling, just a variety of different things in real estate over the years. And so in the last 10 years, I've overseen the rehab of a little over 200 different properties. Got, like I said, quite a bit of experience there. But you're talking about the current opportunity. So I have two companies, one of which is wholesaling. And so I have a team of 4 people that are out there just finding motivated sellers all day, every day. That's all they do. And they bring us a lot of opportunities for motivated sellers who want to sell their house. A lot of them slightly distressed. Some of them are absolute train wrecks, but some of them are just, need some cosmetic stuff and whatnot. And so what we realized is the formula that most flippers use, the prices we were paying to the sellers was not enough. And so quick example, we had a house, 3 different comps, all for 160,000 on that block. And when a lot of flippers say, I want to buy the house, I want to be all in for 70%, that'd be 112,000. It only needed 20,000 of work. So they were only willing to pay 92. And the seller wouldn't go any lower than 105. Okay, but we were able to buy it for 105, put 20 into it, and still make 35,000 on it in barely a month. And so it's a smaller rehab. These smaller rehabs, the wholesalers are missing out on. They're offering them way too little, and they're not getting them. And so we found that we've been able to go in, and a lot of these rehabs, we can actually do them in 2 to 4 weeks from the time we buy the house to the time that it's rehabbed and we're selling it. So most of these rehabs, again, they're $15,000, $20,000 rehabs is it. And it's a price point where a lot of the ARVs are between 120 and 180. So it's right in the middle of the average market price. So there's tons of potential buyers wanting that type of property. And so they've been able to go very quickly. So that's kind of the market, the opportunity that what we're currently doing. Excuse me.
Yeah, absolutely. And it's something we talk a lot about. The affordable housing is definitely, the place that's going to be, the place to be in this upcoming market, especially as things start to change. So I just love the idea that you're doing, you're getting in. It's the perfect market that people are going to want these homes. It's affordable housing. They're not crazy prices or anything.
Right.
And then B, it's quick. You're doing 15 to 25,000 rehab, which you can get done. I think you were telling me basically from when you purchase it to when it's, the end seller, 3 months ish.
Yeah, 3 months is about right. And that's what I call the velocity of money. And so we've partnered with the lenders that I work with. I'll partner with you, and we share the profits in it. And it may not be tons and tons of money, but when you do it 4 times in a year, you talk about the compounding effect, that really starts adding up. And so that's what we do with our partners. I've worked with some people where I just borrow, they loan at a flat fixed rate of interest, and then others where they got a percentage of profits. But then I ended up coming up with a hybrid model that really has seemed to work the best. And so we basically it's a share of the profit. So 20% of whatever we make on the flip, or 10% annual interest, whichever is greater. So anyone who works with me, they know they can sleep at night going to bed knowing that, hey, worst case scenario, I'm making 10% interest annually on my money. And if Steve doesn't do too bad on it, I'll make more. And so far, no one's made 10%. Everyone has made share of profit has been greater. So, but just, kind of that peace of mind, knowing that, hey, I'm involved in a flip, but I know I'm going to make at least a 10% annual return on my money.
Yeah, no, it's absolutely excellent. And, we were talking and you mentioned that. I was like, that's such a great idea because you can kind of stay excited, like, hey, I got potential to do even better, but worst case, you're still making a better turn than so many places out there. I know most of these are going to be first lien position, right?
Absolutely.
Yeah, your money's safe, your money's protected. Steve's been doing this now for a long time, with a lot of experience, has a solid team in place. And Steve, I want to thank you too. I know you kind of spent the weekend working.
Yeah.
You want to talk a little bit about that?
Well, yeah. So, and this is actually great for the other members. I mean, they obviously I have to be a member of the Money Club, which I joined, and they have a very comprehensive screening program, which I'm glad to see. They don't just let anyone in who says they flipped a house one time. I mean, it is a very comprehensive screening process that they utilize, and I'm nearly done with it. Should have that done later today. But that's a great way that they protect the lenders to make sure that that the person knows what they're doing. They've got the assets, they've got cash flow, they've got experience, all these different things. So it takes a little time, but it's definitely well worth it and a great way to protect the lenders. So I'm glad to see that.
Yeah, absolutely. I mean, it's it's one of those things where you just the more little safeguards you can put in place, if you can
Yep.
reduce risk in any way, let's do that over just having anybody come in that they want to. We'd rather have success in the long run where, somebody like yourself and our lenders are the same. I mean,
Mhm.
I was just looking at this morning at a rough draft, but we do have a lender template that's similar to I mean, it's obviously not as in depth because when you're just a lender, but where the money is, have you done it before? Like what to expect, that kind of thing. So
Mhm.
Steve, like when you're, cause I have a feeling when your perfect loan proposal does hit the private money club this week and the deals that you have currently available, you're looking to raise funds for, I think they're going to be funded just like that. And I think
Mhm.
you're gonna have people fighting over it, which for you
Mhm.
as the borrower is a great thing too, because
Right.
if you have, let's say you need funding for 3 deals and you have 7 people looking to lend to you, well, you can look at it and say, okay, well, who do I want to borrow the money for? Like what,
Right.
who's going to make this a seamless and easy transition for me
Right.
to be able to make this happen, because, I've borrowed money in the past and sometimes the lender can be a pain in the ass, so,
Right. Right.
so
Yeah. So I'll get that out there. And would you mind if I went ahead and describe one of the current opportunities we have, the one that's
yeah,
the
no, that would be
current
excellent.
shortest?
Yeah. If you have one
Okay,
in mind
great.
for sure, please.
Absolutely. Yeah. And so it's a little property. It's actually in Fort Wayne, and we negotiated the price. Basically, it's $60,000 is our purchase price. And just so you know, because we share profits, we are completely transparent with every dollar spent on the purchase, on the rehab, holding costs, sale costs. I mean, you'll just see settlement statements and everything. You'll know exactly what we spent, so that we can show you what your share of the profit is. But the purchase price is 60. My original rehab estimate was 10,000. We actually got a rehab bid from a contractor that was 6,400. And I'm actually meeting him at the property Wednesday morning. We're going to look at a couple other things. I think I need to add a little bit more to that. He missed a couple of the upgrades just to really give it that curb appeal. Some of the stuff, yeah, we got all new flooring. LVP flooring is going to look great. All new paint throughout. But just a couple of the light fixtures I think need to be updated. Things that'll give it those finishing touches. So I think when all said and done, it's still going to be under 10,000, but it'll be a little bit closer than the current bid. But I'll have that finalized on Wednesday. So you're talking purchase price of 60, rehab of 70. So all in, I'm looking for an investor that's looking to invest 70,000. We've got comps. The two most accurate comps are between 98 and 104. And so this rehab being so small, we think we can do it in about 2 to 3 weeks. So I'm hoping that by the end of May, even we can have this on the market. We'll probably start at 105, given the current shortage of supply in the market, and with the hopes of getting somewhere between 98 and 104 for the purchase price, and again, an investment of 70 and sale price of close to 100. I mean, you're looking at about a $30,000 profit on this one. So something that's going to take about 90 days or so. That's a pretty good profit for that short turnaround.
Yeah, no, absolutely. I mean, I know one of the biggest issues with somebody like yourself, working with somebody like yourself is just you want to give us back our money so quickly.
Yeah.
Do you do anything with that? Like with your lenders, do you offer them the first dibs on the next deal or?
Absolutely. Yep. Absolutely. So yeah, the first one in, as soon as that's sold, whatever the next deal is, that I'd give them the first shot before I would bring in a new investor. So absolutely, that's a good point. I also did want to share one unique thing that we do when we calculate the profits. The selling costs, the agent who ends up finding the end buyer down the road, we pay that out of our share of the commission. And so when we say, if we sell a property for 100, and let's say that I've got to pay the realtor 3,000, that actually comes out of my share of the profit instead of the overall profit. So that comes out of, like I said, the investor is going to get 20% of the profit. The share that pays for that commission comes out of my side of the profit.
Oh,
So
wow. Okay.
yeah,
That's
it
excellent. Yeah.
makes it a little bit more appealing for the lender. Yeah.
Yeah, absolutely. No, I have a feeling that you're gonna, like I said, just have some lenders that are going to stick with you too for a while because it's great though the quick flips again because there's a lot of what we talk about is all the opportunities that will arise, but like what do you do in the meantime between now and when those opportunities for maybe some of these guys to start buying their own properties down the road start coming
Right.
up where they don't want to get into this competitive market right now. I mean, we all know
True.
real estate's
Very
hard. So if
competitive.
you don't, it's one of the toughest times to get into wholesaling right now because if you don't already have an established network, an established relationship and system in place, to break into that not saying it can't be done. People are doing it every,
Right.
but it's a little bit more difficult as opposed to somebody like yourself that's been doing it for over a decade, and
Yeah.
you have those systems and those relationships in place. So it's a great, place where they can put some money, lend it to somebody like yourself where they're, so because it is quick when they do want it down the road, it's not tied up in a 3-year commitment or anything like that. So
Right.
I
Right.
love that idea.
Good. And I'll share
Yeah.
one last thing before we go, if that's
Yeah, of
okay.
course.
Uh,
Yes.
I have under contract 2 other properties, still putting together the property pages. I'll have them by the end of the week, but the other 2 are in the 105 to 115,000 needed total. That's a purchase and rehab. And those comps are in the 150 to 170 range. So a little bit bigger transactions, but bigger profits. And I have a couple others that'll be a little bit further down the road. You mentioned smaller amounts. Sometimes I work with a seller and they just can't get as much money as they would like for their property. And we actually get them to provide financing. And so we'll pay them interest. We'll basically buy their house and let them be the bank for a couple months while we rehab it. And then we just borrow the rehab money, the 20 or 30,000 needed to rehab that property. And so I've got a couple of those that are in the works as well for a couple of weeks down the road. So for people that it's like, oh gosh, 70,000, that's just still way more than I have. That's okay. We do have some other opportunities coming soon for those smaller amounts.
Yeah, that's awesome. That's very good. Yeah.
Yeah.
And that's a great strategy too. I mean, because the seller financing. I mean, we have like Pace Morby on quite often on some of our trainings, and he does a lot of that seller financing, and it's a great alternative. And a lot of sellers, like you said, I mean, you can almost offer a higher price too because they're not having to deal with everything. They just hold it for
That's
a few
exactly
months,
right.
and it saves everyone a little bit. It saves you costs, it saves everybody, and they end up making a
Yeah.
little bit more money. So
That's exactly right. And that's why it's been so appealing recently is, everyone wants top dollar for their house. Like, well, we can't pay you that much, cash, but if you're willing to hold it for another 90 days, we can finance it, let you be the bank, and then we can still rehab it, and we approach it that way. So, yeah.
yeah, no, I love it. That's a great strategy. And that way the lender can get in with a smaller investment. Like you said, I mean, 15,
Yep.
20, 25 for the rehab and in and
Mhm.
out and done. So
Right.
that's a solid opportunity. Awesome. All right. Awesome.
Yep.
All right, cool.
Well, thank you
Steve.
so
Well,
much. Appreciate it.
yeah, no, I appreciate you. And I know you put a lot of work into that. So thank you. So anybody that's a lender on here that's looking to work with Steve, we'll have this in the Private Money Club. As soon as we finalize his perfect loan proposal and the new deal templates for the new deals he has coming up this week, we'll blast those out to you as well. So if you're not in the Private Money Club, make sure you join, and make sure, if you have any questions, feel free to email me and I will make a introduction directly with you to Steve. So you guys can hop on the phone, have that conversation, and talk a little bit more detail about everything, and get that money moving, get that money lent out, and get it working for you. So, Steve,
Awesome.
thank you very much, sir.
Thank you much. Appreciate it. Talk to you again
Yes,
soon.
sir. We will talk to you soon. All right, Private Money Club. Well, that was Steve Lawson, one of our newest members. So like I said, he's bringing some awesome new deals to the table with a lot of experience. So great place to, take advantage of. My opinion would be take advantage of the hybrid model that he's offering, 20% of profits or 10%, whatever is greater. It's all yours. So that's a really cool thing right there. And it gets a little bit of that excitement factor in the picture as well. So Steve is very, very, very thorough too. Like I said, I took a quick glance at the perfect loan proposal he spent all weekend working on. And the thing is nearly perfect. I mean, he's got, a lot of the background and everything on there. So that is that's a good thing. And we can get that over to you if anybody's interested in lending with Steve. So right now I want to open it up to questions, and then we'll go ahead and wrap. So if anybody has any questions about that, about the way that process would work, about the Private Money Club, about lending, anything in between, go ahead and throw those out now in the Q&A or over in the comments. Let's see. And I did put the link over in the comments for the Private Money Club. So if you're not a member yet, you can join. And what will happen is as soon as you join, you're going to get a series of emails that are going to invite you to our Slack group. So the Slack group is where all the deals and all the introductions and everything are currently being made. Chris and I do have a call on this Friday with our technology team to start whiteboarding and putting the final touches on the development for the new Private Money Club website. But until that's ready, everything is run through the very secure app called Slack. It's the same app that a lot of Fortune 500 companies use for their internal discussions. You probably heard it in the news before. NASA uses it, and they all use it because of the security. It's a very, very secure app for people to share personal and sensitive information. So you'll get emails inviting you to the Slack group, inviting you to the teachable courses like MSTV, the Private Money Club. That's where all the information is, the perfect loan proposal, the perfect loan proposal training, all the templates. So you get all of that. You get MSTV included with it. So after you enroll, you'll start getting all these emails. And then once you get all that set up, go ahead and shoot me an email and let's set up a time where we can hop on a Zoom and let's shoot an interview. So if you're a lender, let's get, let's do a quick little 10-minute interview. Who are you? How much money do you have to lend? Where are those sources of funds coming from? What are you looking for? That kind of thing. And if you're a borrower, what kind of real estate do you have? What are you looking for? What are the price points? What are the terms? How long is it? That kind of thing. So let's get that interview going also. As soon as you get enrolled so we can get that money moving for you. Our goal is to get your deal funded or your money moving within a couple of weeks, really. So let's make that happen. All right, I got a couple of Q&As. Is this a good opportunity to use all the QRP funds, move SEP IRAs and other IRAs? Yeah, absolutely. I mean, we talk a lot about self-directed accounts. So if you have a qualified retirement account, whether that's a SEP, a simple, just an IRA, a traditional, a Roth, a solo K, a QRP, any of those things, QRP is qualified retirement pension, I believe, or plan, qualified retirement plans. So if you have those, you need to make sure you can self-direct it. And we have trainings on self-directed. I'm sure you've heard it. So, make sure you can do that. If you don't, go with somebody like Horizon Trust. That's a self-directed custodian, and they'll help you transfer that money. There's no tax consequences. There's no penalties, nothing like that when you transfer your money from one of these retirement accounts over to a self-directed, and then you can use that self-directed retirement money to lend out to deals like Steve has. And that is probably where the large majority of funds that are coming into either Safari or doing the private lending are coming from self-directed retirement accounts or IBC policies. The large majority, probably 90%. There's nothing wrong with using non-qualified money or just money that's in a savings or, a business account or something like that. But if you can get it into the IBC policy first, why not let it compound while you're using it anyways? Or if it's in the retirement, just be careful with the stock market. It's at all-time highs. Crazy stuff going on right now. So maybe it's a good time to start taking those profits off the table, moving it into a vehicle like this, and taking back control of that money through self-directing. So absolutely. And if you need an introduction for a self-directed custodian, more than happy to connect you with Horizon Trust. We work with a girl there named Brandy Dean. She's absolutely excellent and takes great care of all of our students. Can you explain how a Heloc works if I add 80,000 to the original 100,000 to lend? Yeah, so a Heloc is going to be a home equity line of credit. The equity in your home, you can get a Heloc or go to somebody like Matthew Sullivan with Quantum RE, and you could tap into the equity in your home. Once you pull out that Heloc, go ahead and take the loan for it. In this case, let's say it's $80,000. You now have $80,000 in your account that you can now lend out. So in this example, let's say your HELOC is 4%. I've seen them anywhere from 2 to 5% lately. So let's just go, let's say 4%. You lend it to Steve at 10%. Worst case scenario, you make 10. So you just created lazy money, we call it. So the money sitting in your house, that's equity, that's just sitting there doing nothing, is earning you zero. You pull that out, you pay 4% of the loan, you grow it at 10%, you just made a 6% spread of money that otherwise was sitting there doing nothing. So if you take $100,000 and create a 6% spread, you're now going to make, what is that, $6,000? So you're now going to make $6,000 off that $100,000 loan annually. So not a whole lot of money, but an extra $500 a month. What can that do for you? Well, $500 a month can lease a car. $500 a month can make a boat payment. $500 a month can, I don't know, do a lot of different little things for you. So why not have a free $500 a month coming in for money that was otherwise just sitting there doing absolutely nothing for you? Not even money yet, just equity in your home sitting there doing nothing. So very quick, easy example, but great source of funds. And we do have, somebody said money, get off the couch and work. Exactly. Get your lazy ass up and get to work, money. So, and we do have a really good example. Joseph actually is the one that will be doing that on the 2-day training on exactly how to use that, how he actually used this HELOC to create a I think he's up to like 6 figures. It's crazy how much money he's been able to create using IBC, using lending, and using all these strategies combined together to create a lot of additional income for himself in retirement. Now all he does is hang out and really hang out at the money school headquarters every time I see him. So I don't know what else he does, but has a great life from what I understand. So, all right. Yep. He said, yep. So I don't know. You're always there every time I see Chris on a webinar. So it's all good. All right. Awesome. What else we got? Referring to interest and payments. Yeah, absolutely. All right. So how the one we have in Horizon would get to Steve. Yeah. So the way it works, if you have a self-directed IRA, first you complete all the paperwork with the borrowers. So you're going to, and I believe Steve has all this, when you guys talk, he can talk to you about the paperwork, but you'll want to have a contract, a PN, that sets the terms and everything going on. You'll create a mortgage or a trust document that says, that the money will be paid back, or else you'll be able to take the property. A first position lien typically will be on there. All the other stuff that goes into lending, having insurance on the deals and all that good stuff. So once all that's in place and all the signatures are there, you'll submit that to Horizon with what's called a direction to invest form. And the direction to invest form will direct Horizon what to do with the money. So you submit that with the accompanying paperwork. They will go ahead and wire the money from your self-directed account over to the escrow company with Steve, and then that will close the deal. And then once the deal is completed, all the profits and returns will be sent back to Horizon, and they'll go back into your self-directed IRA. So that's the whole loop on what will happen with when the money comes from a self-directed account. And Horizon will help you with that. Just talk to Brandy or the customer support team, and they can help walk you through that process as well. All right. How does that work from self-directed? Is it considered a loan from the IRA and any interest? No. So when you use a self-directed account, it's just so it's going to be your name, your self-directed account and account number is going to be who the ownership of that is. And again, it just comes out of the IRA. It's just like any investment. So if I had a regular IRA and I was investing in, let's say what are some of the names of some of these funds that they have these days? They have like I was just looking at somebody's 401k recently and had all these weird names, but it had to do with your risk tolerance. So how long if you have 30 years for your money to sit in an IRA, your risk tolerance is probably going to be higher, because even if you have dips, the thought process is it'll go up over time, as opposed to somebody that's 2 years away. If you lose 50% of your account value today, you're kind of screwed. You're not going to have time for it to grow. So in that case, they move it over to very conservative funds, or things like bonds and stuff like that. But whatever it is, so it's the same way. So if you invest in a mutual fund, the money goes from the IRA, it purchases the mutual fund, and then those profits are paid back to the IRA. It's the same thing with self-directed, except the money comes from the self-directed account over to the private loan or whatever you're doing with it. And then once it's done, those funds go back into the IRA. So you never touch it. It's never going to come to you. It's not a loan. It never goes into your bank account. You never see that money. And you're not allowed to see that money. That's what a retirement account is. It's for retirement. You're not allowed to touch that money until 59 and a half years old, unless you want to pay penalties. And again, that's one of the reasons why we talk a lot about IBC, because you're able to control that money now, as opposed to controlling it, just not really having access to it until 59 and a half. But different strategies, different ways. And especially if you had old 401ks that you rolled over to self-directed, that's a great way to have funds to grow for the future and control yourself through self-directing. So can I piggyback, or do I have to compile? Not exactly sure what that means, but you can combine funds if that's what you're talking about. You'd have to fill out a couple sets of paperwork, but you could definitely put, 50% from a retirement account, 50% from cash. You just have to make sure that the returns are done in the same proportion of what they were lent to. So it's 50-50. Make sure any returns or profits are put back 50-50, or else you can really mess up the retirement account. So just be careful when you're doing that, but absolutely. Is there a limit to how many rollover transactions you can do from a Roth to the self-directed Roth? I do not believe there's any limitations. I would just talk to Brandy at Horizon to make sure you're doing everything the right way. But depending on the type of accounts you have, I think that they give you a certain amount of transactions annually. And if you're doing more transactions, you pay like $50 or $100 or something. I don't know if that's what you're asking, Angie, but yeah, just talk to Brandy or someone at customer support. If I only have 20,000 in my Roth, can I split a deal and just use that, make it grow tax-free? You can, again, you can partner with other people. It depends on the borrower, whether they want you to do that or not. But if you have 20,000, as Steve was just saying, I mean, he does deals and he has a couple coming up where the seller is financing it. So he's only looking for funding for the rehab amount, which is right in that $20,000 range. So you might be able to just fund one of those deals, Maureen, if you're interested. Get connected with Steve on one of those. Otherwise, the Safari Fund, I believe the minimum is 15,000. So you could look at that. But yes, you can partner self-directed with cash. You can partner self-directed with another self-directed. You just have to make sure that it's proportional and that you find somebody that wants to do that with you. So yes, you absolutely can do that. And you can use a couple of different accounts, a Roth and a traditional, as an example. Put the money in from the Roth or money in from a traditional to complete it and make sure it's all proportional. So yes, that is all stuff that you can do. Are you able to fund an IBC policy using the SD IRA? Sonia, you really can't. It's you would have to pull the money out of the IRA first. You can't just directly invest into an IBC, and an IBC policy is going to be non-qualified money. So it's after tax money. Yes, it grows tax-free within the IBC policy. And yes, the loans come out are tax-free. And yes, the death benefit is paid out to your beneficiary tax-free, but you can't pull money from a SDIRA or use an SDIRA to invest or fund that IBC policy. You cannot do that. All right. Can you loan from a solo K at Horizon? Would a self-directed IRA be better? Yes, a solo K is perfect. I mean, solo Ks give you tons of flexibility. You can do everything with them with self-directed. And the nice thing about solo Ks is you can even take a loan. So if you are looking to do something, actually, that's a good example. If you were looking to do something like fund an IBC policy using a qualified account, maybe a good strategy would be to take a loan from your solo K, because keep in mind, a loan from a solo K, interest gets charged, but all of the interest gets paid back to your solo K. So it stays within your retirement account. You're not giving it to somebody else. You're paying interest back to yourself, okay, with a solo K loan, with a self-directed solo K loan. So you could always take a loan, fund the IBC policy. It's 50,000 up to 50,000 or 50%, whichever's less, but you could fund that and then slowly pay yourself back and get the money in the IBC first, then take that money and lend it out privately to something like this. So you have the money compounding, you have the money working, and you're also growing your 401k. So that'd be a pretty cool strategy. So that's definitely something you could do. Absolutely. Yeah, loan from. Yep, you could definitely pull a loan. All right. Can you use the SDIRA for the dump in to IBC? That was the plan. Yeah, again, I mean, it could be a loan. It just cannot be a direct investment or a direct pull the money out and put it in first, because it's different. It's qualified versus non-qualified. What are some recommended strategies to grow a smaller, a few $100s? Self-directed account. I'm about to switch my current IRA to a self-directed one. Yeah, it gets a little trickier. You know, anything under $5,000 typically with a self-directed account is going to be a little trickier, because to do a private loan, to do a private fund, to do some of these deals, you're typically going to need a little bit more than $5,000. You know, $5,000 or a little bit more. So it's a tough one. I mean, with, you know, a few hundred, a several hundred, I mean, you know, it's a tough one. You know, maybe I don't know what your risk tolerances or thoughts are on crypto, but you could always maybe do some crypto investing with it. See if you could grow it that way. Maybe do some, you know, maybe do some different trades in the stock market. Um, you know, maybe just explore different avenues. Maybe buy some, I don't know, precious metals, you know, for the long-term growth. Again, our retirement account is made for long-term. And I believe, Kenneth, you're younger too. So, you know, maybe buying like some precious metals in there and letting those grow, you know, might be a great idea to look at that. So those are just a few little suggestions that would actually work pretty well for long-term. All right, let's see. Do we have anything else? We're already coming up on 50 after the hour. So if I don't see any other questions, we'll go ahead and wrap this Money Club Monday. So thank you all for being here like always. And hopefully today helped some of you and maybe gave you some new ideas of things you can do. And I'm sure some of you are already looking to contact Steve. So if you want me to introduce you to Steve so you guys can talk a little bit closer, let me know. Otherwise, he should be in the Slack app and you guys connect with him through there as well. And we look forward to everything that we are doing with the Private Money Club. We will see you next Monday. And I hope everybody has a successful and wealthy week. You guys have a great day. Talk soon. Thanks.